Hey guys, welcome back to the channel. So, how do you keep your winners bigger than your losers? Um, there's a lot of strategies out there, and it can be done many different ways. A lot of people don't really go into depth on it. You hear people say, keep your winners bigger than your losers. It's a lot easier said than done. I'd like to share what I do for my strategy, um, how I keep my winners bigger than my losers, and maybe it might help you out to use a little bit on your strategy. So I'd like to share a couple examples I have. Let's get into it. All right. So we'll start with Boeing here. Um, this was earlier this week. This stock came down into a level that I was watching, and it actually did a kind of a triple bottom here. So this first candle it came down. I missed this first trade. Typically, I would have had an order sitting here with this moving average being my target. But I was able to catch it on the second one. On this candle came down. Um, saw this big wick, so I had placed an order just above it to catch it up to this next moving average, which was the next target. So this particular trade is a 1-to-1. You know, the size of this candle is the target, roundabout what I was looking for. And as I took this trade, I told myself, okay, this is only going to be a 1-to-1. So, uh, what was it about 80 cents? That's how much I was risking here, and I captured about 80 cents on this move. So this is average. It's not a great trade. It's not a bad trade. It's just average 1-to-1. So I had my order sitting up here to sell, or when it got there. Now, this next trade, it came back down, and same thing, it didn't want to break down below this level, and it had another big wick. And after this target had already been tested, um, chances were that it was going to break through and go to the next target, which was the VWAP. So this particular trade here had a lot better risk to reward. 182.59. So this had about 30, 35 cents risk right here. And I was able to ride this all the way up and sold right up here at the VWAP. 184.35 is where the VWAP was. I sold 184.25. So I captured just under $2 on this trade here. So this particular one was like a 1-to-4. Yeah, a little less, 1-to-3.5, 1-to-4. So that was a great risk to reward. This trade happened really fast, so I really should have taken a little bit bigger size on it. First trade, I took 300 shares on a 1-to-1. Why wouldn't I take 300 shares on a lot better risk to reward? So that was a mistake on my part, but I go over my trades just like this, and as I go over it with you, I can learn myself. But that's a good example of a 1-to-1, and then a lot better trade. So these are what I look for in the spur of the moment, kind of quick thinking. The size of this candle really plays a big part on my entry, depending on how far away it is from the target. Um, in my particular strategy here, this seems to work really good for me. But this is how I apply this method of keeping my winners bigger than my losers. This particular strategy has a high accuracy rate, anyways. Out of these examples, I only have one loser to show you, but it'll be a good example. Um, we'll do that one now. That one was on Caterpillar. Same thing. It was earlier this week. And this one happened to be a loser because once again I went back to look at it, and the price had came into this level right here that it had already made the play kind of back here. And when it popped up on the scanner, I was looking at this area, wasn't looking back here. So if I would have known it already bounced off that level one time, I probably would not have taken the trade. But anyways, I did take the trade, and this is what happened. So it came into the level, and this is what I like to see. I like to see the small indecision candle right here. This was only a 10-cent candle. So I would place my order here for the break of this candle up to the moving average and my stop below it. So I'm risking 10 cents. So in this one here, I was able to think pretty quick, and I took a higher share size. I took 500 shares on this one. And I was up for a second, but then it came down and tagged me out of the trade. But on a trade like this with a higher share size, I still only had it was like a $94 loss, which is really acceptable. I'll take that kind of a loss all day, especially when I followed the rules. Except I should have paid more attention. But when these stocks pop up on the scanner, I mean, they're coming into these levels real quick. I have like maybe 30 seconds or so to open up the chart, get my orders in, and figure out what I want to do. So that was my one losing trade on Caterpillar. Now here's another good example. I had a good trade on Qdel last week, earlier in the week. Let me try to find it. This was back on Monday. Sorry, this might take a minute. I have a 1 minute chart open, the 10-day, to try to find all these trades to go over for this past week. All right, here we go. So this stock here had popped up on the scanner this morning, had a big sell-off. I mean, it was coming down big time into a level. Now I was able to get an order out, sitting here waiting, and then I had also had an order at the break of this 1 minute candle. So I had entered twice, and I'll explain why. So I had an order sitting right in here. It came in, it filled. Well, then it had this this kind of decision candle. It really didn't make it didn't break a high of a candle yet, and it didn't really break below. So I had placed another order right above here with the target of being this moving average. Now this second order I had placed here was smaller than my first one. This first one was 200 shares. With this one here, when it came up, I kind of noticed this section here is going to be more like a 1-to-1. So that's why I didn't take a much larger size. So I took 100 shares and came up here and then sold all 300 shares right there at the 222.24 area, somewhere right in here. So this first order I had of 200 shares, I captured more like 1 to 1.5, maybe 1 to 2 risk to reward, and then the second one of 100 shares was about a 1-to-1. So that one worked out pretty good. That was the biggest trade for the week. I think I made 700 on that particular trade, but that had a big sell-off into a level. I saw it coming, and I was happy with the way that trade played out. But so let's see, we got one more stock I'd like to go over. NVIDIA. Okay, so here's a good example of a trade that I did not take. See how it has this sell-off coming right down into here, and then it has this large green candle that comes right back up. Now there's really no entry to come back in on here. This is a trade that you sit here and look at, and it's like, shoot, it went up without me, no entry, don't take the trade. That happens. Ideally would be is if this made an indecision candle right here. The smaller this candle is, the higher share size you could take, because you'll be having less risk in my situation. This might not work in everybody's situation, but I would take higher share size because my stop would be right here below. It would have a smaller stop. So if it was in this range, I mean, this could have been, a good 1 to 3 risk reward, but it just, as soon as it came over, that candle just went straight up. Couldn't take the trade. It happens. But let me see. I have another example here. I think I have one more example of another winning trade. This strategy works really good. It has been working really good lately. This particular strategy, I believe, is like I'm like 17 for 18 trades. That Caterpillar loss was the only loss on this strategy in about 2.5 weeks. Let me see if I can find this other example here for you. All right, here we go. This one here is an example of, I was late to this trade.